Hello and welcome. This is Business at 9. I'm Shibani Gharat. Now, RBI has overhauled its regulatory framework by consolidating 3809 circulars to update master direction and scrapping 5,673 circulars that were found to be obsolete. Anurag J is here with details.
The Reserve Bank of India has consolidated its policy directions, some of them going way back to the 1940s. The RBI has merged its policy directions into 244 consolidated directions. This was announced by RBI Deputy Governor S.C. Murmu today. Some of the consolidated rules date back to the 1940s, and just ahead of today's announcement on October 10, 235 regulations were placed on the RBI site for public comments towards this consolidation exercise. The rules cover lenders, asset reconstruction companies, financial institutions, non-banking financial companies, and also credit information bureaus. The RBI has also rationalized the frequently asked questions section, and that has also been consolidated. Bank licensing has been consolidated, and the final consolidated regulation list will be effective from today. The RBI said that 9,445 past rules have been repealed, and this includes 3,809 rules which have been incorporated in the master circular and 5,673 rules which were obsolete. The RBI says that this will bring down the cost of compliance for the regulated entities, and this exercise will also enable more efficient, more smoother regulation and also effective compliance by the regulated entities.
Now, India's growth engines are revving up, and how GDP growth for the second quarter has come in at a six-quarter high of 8.2%, surpassing all economists' projections. Now, the latest GDP numbers are far higher than the 5.6% growth which was registered in the same quarter last year. Meanwhile, GVA came in strong at 8.1% versus 5.8% a year ago. Manufacturing stood out as the biggest contributor to strong uptick in GDP numbers, growing at a stunning rate of 9.1% compared to a mere 2.2% in the same quarter last year. India has now firmly cemented position as the world's fastest growth major economy, pushing past the concerns over the impact of the US tariffs on our economy. Now let's listen in to what CEA Ananta Nageshwaran said on the GDP numbers.
Now, how is the momentum in the economic activity looking now that we have 2 quarters under our belt? And as MOSPI's data show, the first half of the financial year have recorded a real GDP growth of 8%. So now we can state comfortably that the full year growth will be either 7% or to the north of 7% rather than to the south of 7%. That is basically, we are saying growth rates will be at least 7% in real terms for the full financial year 25-26. In terms of investment spending, as Dr. Govt pointed out, the union government's CAPEX grew 30.7%, and the overall investment rate more than 30% in the economy. GFCF, the gross fixed capital formation, if you look at the expenditure-wise data, that is also showing a healthy number north of 30%. IIP capital goods 5.3%, similar, more or less in the same ballpark as last year's numbers. Capital goods imports, healthy rate of 5%, and sales of listed private non-financial companies recovered and to an 8% growth rate in second quarter in the fiscal year, compared to 5.5% in the first quarter, and also compared to 5.4% last year.
And now my colleague Prakash Priyadarshi joins in with more data on GDP.
Well, the second quarter GDP growth rate of 8.2% is a testament to the resilience of the Indian economy amid complex geopolitical situation and tariff-related disruptions. In fact, that also reflects, strong fundamentals of the Indian economy. With this performance, India remains fastest major growing economy. A very significant development. After this stellar performance, the finance minister has pointed out that the growth has been driven by sustained fiscal consolidation, targeted public investment, and various reforms that have strengthened productivity and improved ease of doing business. It is important to note that the real GDP has registered 8% growth rate in first half of the current financial year. Along with that, post-GDP press conference, the Chief Economic Advisor has clearly mentioned that the long-term trends reflect a steady and resilient domestic growth. Supply-side investment has started giving yield. In fact, agriculture activity remains robust, and disruption in merchandise exports being counterbalanced by significant growth in services exports. Along with that, the most significant part is that the change in government stance as far as real GDP growth estimates are concerned for the financial year 2026, where CA has clearly mentioned that with this performance, now we have confidence that we can achieve at least 7% or higher GDP growth in FY26.
We also spoke with a couple of experts to find out their views on these stellar GDP numbers.
The number is really a blockbuster. So, of course, the full year number that we have, which is already above what RBI's own estimates are, will have to be revised upwards, because you'll now be tracking, even if you assume and take into projection the quarter 4 to be somewhat softer than quarter 3, because you will have some moderation of the front loading of exports, plus some impact playing out in terms of uncertainty relating to government spending, as your normal GDP is going to be weaker. Yet your full year numbers will probably now track a number close to 7.4 to 7.5%. That will be like way above even the higher estimate that the government, that the CA had itself put out in the early part of the year.
Interestingly, when we look at the expenditure side data, we've got yet another quarter of consumption growth, private final consumption expenditure growth being above 7%. We did expect that with the GST related boost that we got toward the end of this quarter, that we would end up seeing a good consumption number.
5 minutes ago, I was very confident about a rate cut, but with the GDP numbers, I hope the RBI doesn't take this too seriously, and the MPC doesn't consider this to be a significant signal regarding the fact that economy has come out of all the problems of COVID, which it has not, certainly. So I still hope there's going to be a 25 basis point rate cut in December.
Now, fiscal deficit for the 7 months of the current fiscal year widened to 52.6% of the full year target. Fiscal deficit for the same period last year stood at about 46.5%. In absolute terms, fiscal deficit for April to October stood at over 8.25 lakh crore. For the full year, the centre has pegged the deficit at a 4.4% or 15.69 lakh crore rupees. Now, SoftBank-backed e-commerce firm Meesho is all set to launch its IPO next week on the 3rd of December. The company has set its price band in the range of 105 to 111 per share. The company aims to raise over 4,200 crore, focusing on cloud infrastructure and marketing, and has reduced its losses significantly this year. Sajid Mangat caught up with the management to talk about their growth and fund utilization plans. Listen in.
So we're going to use the proceeds to growing our ecosystem. So we are doing a lot of investments through word-led technology as well as AI, and I will ask Sanjeev to kind of talk about it. And the second thing we're investing towards is basically growing our annual transacting user base. If you see, for the last 2 years, it has been growing at a very good pace. Last year at about 30% year on year. So there is still a lot of growth potential in growing number of customers. So marketing spends towards making that happen is a big focus area for us. And we're also looking at, can we find some inorganic opportunities over the next coming years? Anything that is aligned to a mission statement would be interesting for us. So Sanjeev, can you talk about our tech investments?
So we rely heavily on AI to simplify the consumer experience, right? Like, it's extremely important because the kind of consumers that we are catering to, like, they need simplicity in shopping experience, and there, especially because about 75% of the orders today comes from ranking and recommendation real estates, which means people are not explicitly telling us what they want. We get clues from them basis the kind of categories that they're browsing, the products that they're spending time on, and so on. So a big focus area is for us to kind of continue to upgrade the ranking and recommendation models to state of the art, and this field is evolving pretty fast with the latest generative AI models coming in. It's also more important to continue to figure out how do we use and how do we improve shopping experience in the best way possible. Also, with Gen AI coming in, there's a potential to disrupt the entire shopping experience. So if you look at the current shopping experience, it hasn't largely changed over the last 2 decades. It's a static, it's a feed of static images and maybe some videos. But if you compare that to offline shopping, that's very conversational in nature. Today, already in the current tech stack, we have capabilities through which we have automated largely our customer support chat and a decent percentage of our customer support voice calls. Again, through in-house built AI. We plan to use the same capabilities, enhance it, and use it in shopping to help new users who are coming to the app, to help them navigate through the app, find the relevant products. So create a lot more engaging and conversational experience. So this is again a new bet that we're exploring.
And on to an ET now, budget exclusive. Sources tell your channel that the government is reviewing its CAPEX targets with ministries and departments ahead of the union budget. Prakash is here with more details. Over to you, Prakash.
Well, we're learning that the government is reviewing capital expenditure targets with ministries and departments ahead of the union budget 2026-27. A comprehensive review is underway to finalize CAPEX targets for next financial year. In fact, sources indicate that the government is likely to increase CAPEX targets by 15 to 20% for FY27, a very significant development coming in. In fact, the Finance Ministry is also looking for new CAPEX drivers to spur demand in the economy. Potential capacity of key sectors also being examined. Sources indicate that the government CAPEX may be expanded to new segments such as urban infrastructure and sunrise sectors. However, ministries like railways, road transport and highways, ports and shipbuilding have been major growth driver for CAPEX. But now, this time around, government is looking for new CAPEX drivers to spur demand in the economy. If you look at the data, Centre's total CAPEX for the first half of FY26 stood at approximately 53% of the budget estimate, and the government is hopeful of achieving 11.2% CAPEX target set for financial year 2026. Along with that, sources also indicate that the Finance Ministry is likely to review a state's CAPEX spending status next month, which stands at approximately 34% during the first half of the current financial year.
Well, thank you so much, Prakash, for all that information. With that, it's time for us to slip into a short break. You don't go anywhere. We will be right back. Welcome back. You're watching Business at 9. I'm Shibani Gharat. Now, this is something that I am personally excited about. The Black Friday 2025 is in full swing, and I have shopped till I have dropped since yesterday night. But shoppers have geared up to add to bulk up their bags with stacked discount, bank offers and exchange bonuses. It's expected to be a bumper day across sectors like electronics, apparel, beauty and more. This entire weekend, in fact, by the way, Anjali Palod is standing by at the Phoenix Palladium malls to check the mood of the shoppers on ground and check the shopping frenzy. Anjali, over to you.
Right, so the buzz for the Black Friday sale has clearly picked up. We are currently at Phoenix Palladium in Mumbai, where now that it's evening, we're sort of seeing the peak of, the shopping interest of the Black Friday sale here in the mall. The footfalls have been increasing throughout the day, and as we can see, a lot of brands here are participating in the Black Friday sale. From your ultra luxury brands such as Coach, Emporio Armani, as well as Boss. Now, these you may not see participating in the usual retail events of the year in India, but Black Friday is the one where we do see deals coming in. So all across the mall, a majority of the brands are participating in the Black Friday sale in the form of discounts. We're seeing up to 60-70% of discount, along with the deals such as buy one get one free, as well as flat, a particular amount off on the shopping of a particular amount. That is another deal that we are seeing. Now, this is also across categories. So everything from clothing, footwear, even sunglasses, lifestyle products, beauty brands is participating in the Black Friday sale. And in the morning as well, we saw a bunch of people come in early and grab the best deals that they could find. But now, throughout the day as well, the shopping interest has been picking up. Black Friday sale originated in the US as a post-Thanksgiving festivity, but now the trend has picked up quite well in India as well, making it one of the key retail events in the country as well, one that retailers, brands and consumers look forward to every year.
Well, thank you so much, Anjali. I'm also waiting for Saturday to arrive to go grab some discounts at the Palladium Mall. But let's also go across to my colleague Jude Sanit, who has filed a report from Express Avenue in Chennai.
Well, it's Black Friday in Chennai, and what that pretty much means is that shoppers have made a beeline to the city's retail establishments, both on high streets and at shopping malls, hoping to get the best of discounts and deals on offer. Now, I'm coming to you from Chennai's iconic Express Avenue Mall, where footfalls have been trickling in all through the day, hoping to find the best deal on offer. Now, discounts right here at Express Avenue, largely comprising of apparel and accessory brands, have gone all the way up to 70%, with the average or the median discount being around 50% per establishment. Now, while accessories, apparel, fashion, jewelry, departmental stores and F&B are more or less the majority of the establishments over here, almost the entire gambit of stores at this mall has offered a Black Friday deal, hoping to attract more shoppers, even as we find ourselves well and truly within the festive season, which of course extends to the shopping season. Very interestingly though, Chennai's very first Lego store has also made its presence felt on this Black Friday day, as it hopes to attract shoppers and fans with a Black Friday discount of sorts on its sets. So the fact remains that footfalls have been healthy and they're all set to go up a notch, even as retailers at Express Avenue and many other malls in the city have put their best foot forward and their best discount forward. And in a nutshell, that's what Chennai's Black Friday is all about.
How exciting, Jude. Thank you so much for that. But laptop and PC sales have been lagging behind this year, but that could soon change come 2026. In an exclusive chat with ET Now, Acer India's Chief Business Officer Sudhir Goyal has said that the company is scaling up its laptop production by 50% starting next fiscal, as it hopes to meet demand from the government and education sector. The projection comes even as Acer expects to hit the 15% market share in India by the end of 2025, powered by expanding consumer segment. I got you talking to Acer's business head on some of these projections and the company's capacity utilization game plan at its recently inaugurated Puducherry facility. Here is a slice from Jude Sanit's conversation with them.
As a growing country, the aspiration of the people to adopt technology has been there. We have seen the growth of the smartphone. We have seen the growth of the smartphone, the various applications which people are using the smartphone for. Migrating them to the PC for a full, let's say, content consumption as well as the content development side has still been a challenge. It could have been an affordability issue. It could have been that we have not been able to convince the consumer of why this kind of a device is required. Well, I mean, there are different estimates that as an individual, maybe our penetration is close to about 14 to 16%. So there are different estimates of what kind of a penetration we have, or how many people have their personal access to a PC device.
Right.
It is much lower than most of the developing or the developed economies, and we do hope that in the next few years we should go in for at least 20% plus adoption. Why it has happened? Maybe affordability is one reason, and therefore the industry has to innovate so that the adoption becomes much easier. We have seen that in a growing economy like India, I mean, there is aspiration value. So today, when we talk about the tier 3 towns, we talk about tier 4 towns, the parents, they definitely would like their kids to have a better education, and the PC is becoming an important device for them. COVID has definitely changed and shown us that both work from home or learn from home or entertainment from home is possible. And that has set the ball rolling, where the digital education or let's say the offline education and the offline entertainment is becoming important. So it has speeded up, and I'm sure as industry, when we innovate more solution, we definitely can see a much faster adoption.
The cyclonic storm Ditwa is very likely to reach the southwest Bay of Bengal near North Tamil Nadu, Puducherry and adjoining South Andhra Pradesh coast by early morning of November 30th. And the storm is expected to make a landfall on Sunday, the weather office has said. The state of Tamil Nadu is on a high alert in the view of the cyclone warning. NDRF teams have been mobilized across the state. Now, Tamil Nadu Chief Minister M.K. Stalin has urged his party officers and office bearers and functionaries at various levels to remain active and extend support to the people. Meanwhile, cyclone storm has caused flooding across Sri Lanka, and in response to a request from Sri Lankan authorities, India has agreed to deploy its helicopters from INS Vikrant, currently docked in Colombo, to support the ongoing rescue and relief efforts. At least 56 people have died as Cyclone Ditwa wreaks havoc in Sri Lanka. And mind you, this is also the time when, the east coast of India and also regions around Sri Lanka get hit by cyclone, the October to November period, and also just prior to the monsoon. Now, with that, it's a wrap on Business at 9. Goodbye and have a great weekend.